Hello, everyone. My name is Peter Lane. I'm CEO of Jacobi Asset Management. We launched a Bitcoin ETF a couple of years ago. So fortunately, my job is talking about Bitcoin, which is great. On panel with me, two absolute brilliant people that I've known for a while now, who have also gone down the Bitcoin rabbit hole and are merging it with traditional finance. So I'll let them introduce themselves. But first of all, here's James.
Hi, yeah, I'm James Priday. Actually sponsored the first event up in Edinburgh that Jordan put on back in 21 or 22. But yeah, so we've been in the space for a little bit. So I'm CEO of P1, which is traditional investment management, traditional investment platform, and I also run an advice network of about 60 financial advisors. So very much traditional finance, but personally been in the Bitcoin space for quite a while and slowly been merging it in with what we're up to.
Thank you. My name is Charlie Morris. I'm the founder, CEO of Bytetree. We're primarily a research firm, actually a TradFi research firm. Boo! I know. There's a bit of crypto in there as well. But the reason I'm here is we've got a Bitcoin and gold ETF, ETP, ETN. Can't say ETF in front of Peter Lane, and we'll be touching on that today, I hope.
And we might be traditional finance people by background. So I started working in the city in wealth management the day Lehman crashed in 2008. And I worked with Charlie, funny enough, probably about, 8 or 9 years ago. And he was banging on about Bitcoin then. And so even though he's an absolute legend in the traditional finance world, he's been into the Bitcoin space for a very, very long time. Charlie is the king of charts. So he's put some charts together, which we can go through, and Charlie can talk you through some of these, just to give some visuals as to what we can have as talking points. And then we can come on back to these points and discuss. And if everyone wants to jump in at any point and ask some questions, we're happy to open it up and, have a bit of a discussion within all of us, not just us three. So Charlie, you want to take it away?
Yeah, a quick chart round. Let's go. So Bitcoin volatility, back in 2014 on the left-hand side, it was 160%. And, in 2016, it went down to 40, bit of a jump, but it's been slowly coming down and is now on a one-year basis below 40%. What does that mean? I'll come to that in a sec. Gold is beneath, just under 20%. The dashed lines are the 6-month volatility, which are a bit more a bit more responsive. So the volatility of Bitcoin, everyone says Bitcoin's volatile, don't they? Bitcoin's volatile. Is it? Next slide, please. The black line is Bitcoin. So these are the biggest 7 companies in the world. They were at least a month ago. They're now down a bit. But the top one's Tesla with 70% volatility, Nvidia 55 or something, 57. Bitcoin comes in under 40, as you saw. Same as Meta, just slightly higher than Amazon. Then we've got at 30 Apple and Alphabet. Then there's Microsoft in purple, which is about 25%. So, Bitcoin is not that abnormally volatile compared to the largest stocks in the world. Very important point to take away. And then there's gold at the bottom. And I'm going to plug my product, Bold, Bitcoin and Gold, very quickly. We'll do this at speed, and then we'll get to the nice chat.
Still not working. There we go.
There we go. So that's 8 years since the Bitcoin high at the end of 2017. In the black line, Bitcoin does what it does very well, goes up a lot, then it goes down a lot, but then it goes up a lot more again. And we've seen this pattern many times. Gold in the color gold. And the bold strategy is what happens if you own Bitcoin and gold risk-weighted by 360-day volatility and rebalance every month. Now, hard to do on your own if you can be bothered, but that's nonetheless the outcome of the bold strategy. It's roughly 1/3 Bitcoin, 2/3 gold at the present time. Okay, and I think I've only got one more. The volatility of Bitcoin, gold, and bold is about the same. So the relevance here is, if we're talking about traditional portfolios, and if you have clients, you're an IFA. These are some of the arguments and the conversations you can have. Okay, and I think, and one more, what's the application of Bitcoin and gold? And I bring in gold into it because not just as my product, but gold is widely owned in portfolios. In the wealth management industry, Bitcoin isn't. And this is a way to get Bitcoin into the industry by mixing it with gold. As you can see, solves lots of problems. But that last slide, sorry, back one, then I'm done. In red there is the global money supply, how much money they print in the world. G20 countries. and the bold index. So basically, Bitcoin and gold together. One's risk on, obviously Bitcoin, risk off, gold. Put them together in a risk-weighted way, and you get a very, very clear match on the global money supply. It's obviously not 1 for 1. It's about 3 to 1. So it's a very good payoff. Done.
Yeah, and I think that's such an obvious way that Bitcoin is penetrating traditional finance. So Charlie's got a product whereby he's mixing gold and Bitcoin to get into traditional portfolios. James similarly is building traditional portfolios, but with Bitcoin in.
Yeah, so I'm actually have to give credit for this slide to Peter, because Peter suggested that this slide would
Pure plagiarism.
Yeah, absolutely, it is straight plagiarism. So all this does is this is effectively a chart that shows how you've got to be pretty stupid if you don't see why holding Bitcoin in a traditional portfolio makes a lot of sense. So all this is showing is the yellow line is effectively in traditional finance, a 60-40 portfolio, so 60% equities, 40% bonds is the yellow line. This is going back to 2015, this. And if you have 1% Bitcoin allocation, 2.5% Bitcoin allocation, 5% Bitcoin allocation, and what that does to the average traditional portfolio. So I think that's quite an easy one for people to have a look at and understand why actually just looking at past, it makes a lot of sense starting to include an allocation into even traditional finance, traditional portfolio. It's actually quite difficult to argue with, but obviously people still want to argue with it. All this is a chart to show. So at P1, we did try to have something available for the retail space and for financial advisors with normal retail clients. So normal retail clients, you know, the average mass affluent person in the UK. We set that up in 2022. So it's our P1 digital assets portfolio. What that is an imperfect way to get exposure to the Bitcoin price. So by imperfect, that's an allocation to Bitcoin mining companies, to large Bitcoin treasury companies such as MicroStrategy or Strategy as it is now, things like Block, and there's also some ETFs that have some sort of payment infrastructure focus to them. So that's the blue line there, and you can see we didn't do a too bad job at tracking the Bitcoin price throughout that period, but Bitcoin in and of itself, if we could get access to it back then, would have been a much better thing to hold. So I'm sort of doing us a disservice because I'm saying our portfolio is an imperfect way of accessing it, but it was the only way we could actually give retail investors an ability to access the Bitcoin price in things like their pensions, their ISAs, their general investment accounts. But luckily, there's some stuff coming now that means that we can start to give a more direct exposure.
Yeah, that's great. And we've been speaking about this for a couple of years now. This chart in particular is the absolute definitive reason why somebody within a traditional finance role should consider Bitcoin in a portfolio, because this is absolutely a no-brainer, isn't it? If you had a little bit of Bitcoin, the difference it does, even if you had 1%, you're outdoing what a typical portfolio does. And for me, Bitcoin getting in traditional finance is mainly there's probably a myriad of ways it will do it, but it's twofold. It's getting into traditional products like James just touched on, getting into SIPs, ISAs, investment accounts within companies, being able to own Bitcoin in both self-custody but also within investment accounts that whatever way you're comfortable with, but also getting into funds that you don't have to then, if you're not a Bitcoiner and you just want a little bit of Bitcoin to hedge against something or give you a bit of a number go up juice to your portfolio, there's not that many easy ways unless you are, people like in this room, you're a Bitcoiner. And so bringing in ideas to get Bitcoin into traditional ways that are very easy for people to do, that is the absolute key to get Bitcoin into traditional finance. Because I started working, as I said, like 17 years ago, and people generally can't be bothered to do anything unless it's easy. And it's a shame sometimes because they're going to clearly be better off. But unless they've watched Joe Bryan's great video, What's the Problem? They don't really know what the problem is. And therefore, do they really care about Bitcoin? And a lot of people will go in about their daily lives. If I take my example, for instance, I'm trying to run a business. I've got 2 little children. I've got a house to keep my wife happy in. Do you have time to learn about something new? And if you don't have time to do that, how are you ever going to get anywhere unless it's really easy? And that's the whole reason we built our company, to create a Bitcoin exchange traded fund, because it's just easy. You don't have to learn about anything other than saying, yep, I want a bit of Bitcoin, click, there we go, in a traditional portfolio. So what these two guys have done in building Bitcoin products to get into traditional portfolios is a great step towards just making Bitcoin. And what I believe Bitcoin will eventually be is not even a talking point. It will just be a normal thing in every traditional finance product, in every traditional finance wrapper. However you want to hold it, there'll be something available. Once we get regulators and legal minds around it's not a scam, the floodgates should open, and Bitcoin, in my opinion, will end up being in every single fabric of any financial product, traditional or institutional or retail, eventually. And it's down to products like this and people like us that try and create stuff that makes life easy. And we all want mass adoption, but mass adoption will only happen through ease of access.
Yep. I mean, I think an important distinction of traditional finance, right? So there's sort of traditional core banking infrastructure, you know, Bank of England, and then all the banks that surround that. I think it's important to distinguish people like us from that sort of core sort of fiat financial system, because to be honest, it doesn't matter to a company like mine whether, you know, fiat survives and fiat does well, or people are, all we're trying to do is have an allocation for clients to things that are actually going to mean that in real terms over the long term, they're going to get a return. So we're sort of set, there's two parts to the traditional finance system is my point. And it's important for people to understand that. Not everybody in traditional finance is necessarily the enemy to Bitcoin. Actually, there's quite a big part of the traditional finance system that needs to go with and understand the Bitcoin movement. There's actually Dan that's in the room that's helping to educate Bitcoin, well, he's called the Bitcoin IFA, that's trying to educate financial advisors about Bitcoin. And I think it's really important because what you can't get away from is in the UK, financial advisors drive the direction of asset flows more than people understand. Financial advisors are really important in terms of helping clients understand different asset classes and allocate to different things. And it's going back to Peter's point. Most people, unfortunately, they're either time poor or they're slightly lazy, or they actually don't want to take responsibility for their own decisions. And actually, they want to go out to somebody like a financial advisor to help them with that. So bring the traditional finance into sort of decentralized finance in the Bitcoin world is really important.
The world is changing fast, and your business is no exception. How you save, plan, and protect your future is shifting, and standing still now means falling behind. This is the reason we are launching the UK's first Bitcoin business network, and it exists to help UK businesses protect what they've built and turn Bitcoin into a genuine competitive advantage. It's a place for founders, entrepreneurs, and executives to share what's working, learn from people actually doing it, and help drive positive change across the UK. So if you are a business owner or an entrepreneur, hit the link down below to join the network and help shape the future of Bitcoin in the UK. Okay, let's get back to the video.
There's another really, really important point, and this is Charlie's chart, which he sent me the other day, which is brilliant. Volatility reducing is going to make life a lot easier for people to make the decision to step into Bitcoin. Now, Charlie, you've had an unbelievable career in fund management. James and I are on the sort of client-facing bit, but you create funds, you build funds. Where do you see this eventually going, and what does that then mean to get Bitcoin into traditional finance?
Well, I think that is, you know, where the hell's volatility could end up in 10 years' time is very even harder than to predict price, quite frankly. But, you know, something like gold's been very stable at, let's call it 18 for since it started free trading, which was 1971. It's been periods when it's been higher. The late 70s, it went higher than Bitcoin was in 2017, for example. But I don't think personally, I find it hard to believe that Bitcoin's volatility could go below gold's, for the very simple reason that gold has a value buyer. In fact, it has several value buyers. One of the central banks, when the price of gold goes down, when it nosedives, there's a central bank saying, oh, thank you very much. Or there's a jewelry business. I mean, 1/3 of all gold mined is consumed in jewelry. So there's plenty of demand for when gold collapses, which is why the vol's so low. Now, Bitcoin collapsed in the last few days, right? I mean, we're getting...
Has it?
I mean, no one mentions it here, right? But and I've seen it so many times before, it's just no longer interesting. But there isn't the value buyer in quite the same way. You haven't got the central banks there catching it. You haven't got the jewelers or some other alternative buyer who's there. So I think that's one reason why Bitcoin is likely to remain more volatile than the gold in the long run.
Do you then think Bitcoin treasury companies become that potential buyer, like a jeweler? Maybe it's not quite the extent of a third of Bitcoin, but Bitcoin treasury companies seem to be happy to sweep up at any price.
I'm not a big fan of Bitcoin treasury companies, to be honest. So ask someone else.
I'm aware. We'll go on to the next one that you did have, Charlie, because I had this argument a little while back with the regulator that regulates our Bitcoin ETF. And we were only allowed initially to sell to institutional professional investors, and they cited consumer protection. And I said, well, people can actually just buy Bitcoin. My 5-year-old in a junior SIP and ISA can buy MicroStrategy, but she can't buy my Bitcoin ETF, which is a regulated exchange-traded fund with custody with an FCA-regulated custodian. And we made these points that Tesla is more volatile than Bitcoin. And I think once you put Bitcoin into this mix and show some of the most traded stocks on the planet, it isn't out of range. It's not out of range at all, is it? And it's going to just sit there. And I imagine we'll carry on going down. Right?
Well, the main point is that everything but Bitcoin will be pretty much in every traditional finance portfolio at the moment.
Yeah, without a doubt.
Bitcoin.
Yeah. What do you think what needs to happen for Bitcoin to then become part of that?
A lot of it's regulatory. I think, if you're running a regulated business, I run 3 of them. You've always got to be looking at what the regulator's up to. In terms of providing access to retail investors, we're seen as sort of the gatekeepers of access to, so if you've got, Mrs. Miggins, to use the sort of just the average person on the street that wants to go into something, they go into Bitcoin and actually they decide that it's too volatile for them. It's the people at the front line that actually take the flak. And normally the Financial Ombudsman Service, they're actually going to go on the side of the average retail investor if they suddenly decide they don't like something. So if you're going to actually provide access through an investment platform, through a fund, through a traditional investment portfolio to something like Bitcoin, you need to document really well why you're doing it and why it's right for the target market you're making it available to. So there's huge barriers and there's huge risk to make that step. And unfortunately, at the moment, for most regulated traditional finance firms, it's just not worth the risk because they know the regulator themselves are volatile. They make decisions with in hindsight, so you suddenly get slapped when you weren't expecting to get slapped by the regulator, and that's what everybody's scared of. That's the main things holding the adoption back.
Yeah, there's quite a common saying that you're never going to get sued for investing in a BlackRock fund, or you're not going to get fired for investing in BlackRock, are you? Charlie, what do you think needs to happen for Bitcoin to penetrate fully into the traditional finance world?
Very good question. I think that we've come a long way. We had the ban in 2020 on the ETF, ETN, and the ETF is absolutely vital for the wealth management industry. You can't self-custody other people's money; it just doesn't work, right? So you have to use financial products, and the ETN and the ETF are the same thing. It's just a legal term in Europe because a fund by law must be diversified with 22 different assets. So we have a note instead. And we use when it's been working very, very well for gold for 25 years. So that vehicle being available is now happening. We now have a Bitcoin ETF in London, but AJ Bell, Hargreaves Lansdown are still going, not sure, because they've got the FCA customer duty of care. And they've got these various policies they've got to adhere to. So they're not quite sure if they put it on their platform, whether it's their fault if Bitcoin goes down a lot. And so there's some of these things. And, this is why Bold, which is coming to London very soon, is a Trojan horse. Because, whatever Bitcoin does, it's only 1/3 of that problem. 2/3 is in gold. So I think that is why it's a quite a useful stepping stone. So, this is why I created the product. I mean, let's be honest. It's A, good to mix Bitcoin and gold, but B, it solves a problem for asset allocators because you've got something that can't go to zero.
Yeah, and I think you are building DFM models with Bitcoin.
Yeah, so similar to the chart we had up earlier on, we've effectively just taken a decision. Now we've got Bitcoin ETNs that we can make available. We are taking all of our core portfolio solutions and we are just going to have a equivalent to those at similar risk levels with slightly different asset allocations. But as part of the alternative asset basket, we're going to have 1, 2.5 or 5% Bitcoin allocation. What that does is it gives optionality to financial advisors that are advising their clients to use our portfolios. They can either go with a medium risk portfolio portfolio here, or they can take the medium risk portfolio here, but with the Bitcoin allocation. So we're giving choice, which is all we can do at the moment. Because if we were to go too Bitcoin heavy as a company and we'd start talking about it a lot, unfortunately, we're trying to serve a very wide range of financial advisors and clients. And some people, unfortunately, have embedded views. So the best thing for us to do initially is to go, actually, just look at the two. Actually, if you're going to buy our moderate risk portfolio, 60-40 portfolio, and then we've got an equivalent, something that they can access for their clients that's got a 5% allocation to Bitcoin, at least we can show them this chart, and it's quite an easy decision, I think, for people to make.
Yeah, and I think what I've learned over the years of advising human beings is that the more they do something, the more it isn't very scary anymore. And so when you start investing, they generally become quite cautious, or there's balanced. And then the more they do it, the more they go through investment cycles, they understand the equities they're investing in, their risk profile just goes up anyway. So I think this is a natural step for them. Just really got half a minute left. Is there any questions in the room before we, well, the quickest arm in the world.
I like Bitcoin Treasury companies, so I'll let Charlie grab that one.
If you're talking about Stretch, really, the strategy product, I am fascinated by that. And I would like to see track records, a very, very important thing for people to see before they can really get into it. But I think Saylor created it by AI, right? And then they've just used the supply and demand lever to create something that stays static, and he's just hoping that Bitcoin's going to outdo 10%, right? So if they can carry on and they can do that, that is another Trojan horse, like Charlie was saying, to bring Bitcoin into industries which can't touch it yet. And I talk quite a lot about there's pools of capital around the world that can't touch Bitcoin, and those are the things we need to target. Like insurance funds, it's like $50 trillion in insurance funds. It's got no idea what to do with Bitcoin yet. So somebody needs to start penetrating that. And if they do, I mean, what can, a tiny element of that going into Bitcoin changes everything for Bitcoin. We're minus 47 seconds now. So before Jordan and Jez kick off, there's a sartorial elegant man at the back who has got a question. I think define inherent value. Sam Roberts is in this room. He's going to have a question with you afterwards if you want to talk about that. Charlie? You're the most technical
networks
man
have value. Yeah, networks, bringing people together. Today, Jordan, well done, Jordan. You've brought us together. That's valuable. Bitcoin's an even bigger network.
Yeah, sorry, just because we're short on time, Bitcoin being used in the third world as a payment system is a real use case. So I think if Joe Nakamoto's still here, he travels the world looking at ways in which Bitcoin makes life people better. Joe, if you're around, can you have a chat with this chap about the ways you've seen in the world that does it? Because we're about to get...
Sorry, one quick one. The inherent value point. Forgetting about having some sort of monetary usage. Bitcoin is a time chain, so it's a way to record information over time, which is something that is inherently valuable. It's something that can't be hacked. It's something that you can't mess with. So you can record information over time. That's unhackable currently.
And if you want to escape Nazi Germany, it's quite sore to put vast amounts of gold up your bum. So easier to remember a phrase.
Great. Thank you very much. Jez is going to come up and kick us off now, so we'll let you get on. Have a good day.